Hi, my name is Gunaseharan, Ganapathy. I'm the director for MOL in London, and I head up this business unit called LNG division. And I'm responsible for a fleet of about 17 LNG carriers, which are on time charters to various customers. These are big LNG carriers that are trading globally. And I'm also responsible for the technical manager who's looking after the assets. I'm a director in that company too, and also a director in all the joint ventures that we have for all the ships. And my area of responsibility is whole of Europe, Mediterranean, and Africa in terms of business development. Yeah, I think the general data, first couple of slides and all that was to recap where the market is, and which I think was covered by a couple of other presenters too previously. But it's just to reinforce that the market looks pretty robust in terms of production, volume of cargo available in the market, liquidity is increasing, cross trades are occurring. However, I also wanted to highlight that there are significant challenges for owners who are operating in that sector, because without the owners being present, these cargoes will not get moved. You have to have the ships to move them, and that's where the problem area lies, which I wanted to highlight to the audience so that they would at least be aware of the challenges that we are having too. To help us to do our job well, they need to understand what our problem areas are. I wanted to do that. Again, coming from the owner's perspective, because the trading side, they've already highlighted what their challenges are going forward. It's to do with regulation, it's to do with geopolitics in terms of all the other issues that are there. But for the owners, the biggest challenge now that I see going forward is the tenure of the time charters, the contracts that we have with our clients. Those have dropped off from their original 20-year type of contract that we have for the life of the ship. They're down to about almost 10 to now down to 7-year time charters. Now, why is that important is that the LNG business is unlike many other businesses where you'll find there are so many cargoes worldwide to work. For example, bulk cargo or the tanker cargo or the container ship cargoes. They're all over the place, so ships coming off some arrangements or contracts can go into other businesses. LNG is still a small business in that sense. So when you don't have a contract, you have to wait for the next contract. It's not very easy to lock another contract. So you're waiting time, idle time. So if you only have a 7-year contract, for example, that's good. After 7 years, your ship comes out and you're exposed to the marketplace. Whatever the rates are in the marketplace, at that point you're exposed. So you cannot hedge your costs, you know. And we have to pay the banks. We won't have the turnover to be able to fund them. And the owners are now having this burden of, we call it residual value risk. That's a burden that we are carrying now with the new contracts that are coming into place. And this is a development, and the charterers have got significant leveraging position, and owners don't have negotiating power at this point. And so I think it's going to get tougher going forward for ship owners who have ships that are going to come out of contracts or who have speculatively built ships. They're going to have difficulty. For MOL, we've almost 97% of our ships are all on contract, long-term contracts. But for new contracts, we're seeing these issues. So we're having great difficulty in participating in that marketplace. So we're having to reinvent ourselves, be creative, to see how we can actually continue to participate while mitigating that residual value risk. I think that's the main challenge for us. Very good. I mean, as I said, production volume continues to go up. I think the US shale gas has really produced a lot of new molecules into the marketplace. Now with the oil price going back up again, the shale gas producers will come back again to produce more gas. So I expect LNG to continue to grow going forward. And also it is spreading out globally. Production centers are now globally positioned, not just in one location like before. And that helps vessels to cross-trade. So it's good news for traders actually. Of course, I missed the first day because my flight didn't take off because of fog. So I started the day today, the second day, full day, and I was surprised with the content from the presenters. A lot of it was to do with non-marine related, shore-based work and topics. But for me, it was a good filler for what's going on in Europe primarily, because I'm based in London, and it's good for me to understand the issues that the traders have got at this point, what are the potentials, and what they want to do. And so it gives me an opportunity to actually be able to better understand and try and do some business with them. At the end of the day, we need to do some business that makes some money.